Hey, Alexis. Hey, Helen. We'll be underway in a couple of minutes. Welcome along, everybody. We'll get underway with the show for real in a few seconds. I'm just trying to see if the YouTube share is sharing. I always have a few problems with this. I can see myself up there now, live now. If you're watching on YouTube, that's pretty cool. Going to go into, we'll be starting for real in a little while, guys. Got that up. Going to share that there. Brilliant. Looking pretty good, guys. Got a little bit of admin to do before we can be underway. I just want to say welcome. It's great to have your company tonight. It's nice to see a few less in the Zoom room and a few more coming in live. It is neat to see you guys there. Alexis, we must organise for you to have a panelist link sent straight to you, so you don't have to go through this every time you're on the way in. By the look of that, hi Janet, hi Richard, Shukri, welcome along, buddy. Nice to have you on board. Looking forward to your stuff a little bit later on as well. We'll be underway in about a minute. I'm just checking a couple of things before we start. I wonder if I can do this. I think the question is, I wonder if I know how to do this. So the plan for the day. Hi, Alexis. How you doing? We'll be underway in a few seconds. Hey, Shukri. Hi, everybody. Welcome to have you guys along. Be you on the YouTube channel, Facebook for Online Trading Profits, or Facebook for Actions to Wealth. It is right now. It is at 9:15 in the evening in New Zealand. It is 5:15 p.m. in Singapore, Asia, and we would like to welcome you along to TTR Sunday, the original show, our version, our free version of market analysis will come out for the next hour and a half or so. We would share with you as much as we possibly can. Good afternoon, John. Welcome along. The plan for today, first of all, to introduce myself. My name's Paul Bottrell. I'm the Managing Director of Online Trading Profits and Actions to Wealth, and I'm a Forex trading mentor to a Forex trading fund. The plan for today is to have a quick introductory chat. We'll have Alexis on fundamentals in a few minutes. And a big week for fundamentals. Not much, as you can see in the Forex factory here, but big stuff. We got FOMC coming this week. We got Japanese monetary policy stuff, stuff from the pound from Great Britain as well, which we're going to need to see because, boy, that pound took a hiding this week. Julian will be coming in. Julian McCree, my mentor, head of a professional trading team in New Zealand. He'll be in just after that, take us through 4 charts. He's just finishing off some coaching now. Shukri's in to talk crypto at 5 to the hour. Ainslie on top of the hour on gold. Lloyd will do the currency index just about 10 past. Geoff's on 4 charts after that. We'll do a summary, and we'll look to be out of here about an hour and a half from now, around 10:40 New Zealand. I think that's around 6:40 Asia time, and we'll be off for chit chat with the team if they are around for that today. So, as I said earlier, welcome on and all. It's good to have you guys' company. We've done a little bit of that. I am keen to just check on this stuff. Looks okay right now. Look, guys, I'm going to ask you guys, if you're with us, wherever you are, if you enjoy, hey, Alan, how you going, mate? I'll keep an eye on the YouTube questions. I'll keep an eye on the Facebook questions. But if you could do us a favor, if you could like the show and if you could subscribe to the Facebook channel, we'd appreciate it. You're welcome to watch it on YouTube, but the best place to watch this is on, you're welcome to watch it on Facebook, but the best place to watch this is on YouTube. If you can go to YouTube and subscribe to the channel, we'd appreciate it. If you can like what we're doing, we'd appreciate that as well. It makes a big difference in getting a few more people to come along and join these things. If you're on Facebook, indeed, like it if you like it. Leave a leave a positive comment if you can, and we will go from there. Cheers, Desmond. Thanks for liking the video. Much appreciated on Facebook, mate. It is much appreciated. These things do make a difference to more people being able to watch our show. It gets on the algorithms, the all-powerful algorithms. And talking about all-powerful, my first guest today, as I said by introduction, I'm head of the Actions to Wealth trading team, and I mentor a professional trading team at a licensed fund. We'll have a lot of the team in today to talk to you. We've mentioned a number of them already, but the first one to talk fundamentals is Alexis. Alexis, how are you going?
Hi, Paul. Hi, everybody.
How are you doing? Thanks.
Yes, all good.
Good. So We'll have a chat with Ainslie and Shukri about the week reasonably soon. Got a little bit of talk about Bitcoin being weak. Shukri, be really keen to get your opinion on that as we go along. Ainsley, that gold range has been a bit of an issue, and we'll talk about that a bit later on as well. But Alexis, what's happening for us fundamentally this week?
The fundamentals are pretty interesting last week, and I think I guess this is the time where it kind of helps to have a fundamental bias. So my name is Alexis, and I trade with a fundamental analysis bias in my trading, but of course I use the technicals for entries and finding trades to take in. All right, so I will wait a while I get a screen share. And in the meantime, I'll talk to you guys about a couple of stuff that happened last week that caused the pound to tank, or what's happening in the euro. So a couple of stuff. I would like to show you guys a couple of stats. Let me see if I can share screen. And yes, okay. So a couple of just a simple stat. I think the so-called story of last week was inflation. Okay. Hope you guys can see the slide. So this is from Trading Economics website that I use pretty often for the free stats. And this is just a comparison of the inflation figures, the consumer inflation figures that's been coming out in the last so-called couple of months. All right. So if you can see for the US, it has a gradual increase in its inflation. For the euro over here, you can see last month, we did pop down into a negative 0.2. The UK seemed pretty okay with the up 1%. And I'm just doing Singapore for comparison because I live there. We are in a little bit of a negative inflation, but I'll talk more about that in a little bit. Now, the reason why we're looking at inflation, because the concerns that are happening around the euro side is, the eyes are on the euro side, where they're kind of wondering, with the current inflation figures in the euro, are they going to do something about it to change anything? In fact, to change anything about their monetary policy, or whether or not they're going to come up with any more so-called intervention. All right, you can see, like, I'm just showing you guys headlines right now. You can find this on the Financial Times. Okay, but last week, while there was concern of that whether or not Lagarde would take a step in, but I think she was kind of downplayed the so-called inflation issue. And what that did was it kind of caused or it kind of allowed the euro to kind of do this. Let me just show the chart. Okay, so the euro, what happened is it's a pretty range bound. This is a daily chart just between the euro dollar. All right, you can see that it's been traveling in a really tight range. A major reason, of course, is because I think with everywhere in this COVID situation, recovery is not going to be fast until numbers get better and borders open up. And I think that's why, if we look at big picture, it really is about how the economies are kind of just able to sustain where it's at, so that it doesn't. I think a lot of countries, they are just trying not to. They're trying not to go too high. They're trying not to go too low for now, because it's still a little bit of a wait and see moment, a little bit of a balancing moment, where everybody wants to recover, but while borders are still closed, there are sectors, there are sectors in trouble. There are companies in troubles. They are really trying to balance this. Number one, without printing too much money, or trying not to print money too fast, and that is what I think the euro is kind of doing, where we do see that there might be an opportunity for another stimulus, but they're not going to rush into it. A little bit of a different stance from the US. They're going to really make sure that it's really needed before they start printing it and pumping it into the economy, because I think if they're going to do it too quick, it kind of is a moot point, because it's with the borders closed, and with everything still pretty sluggish, injection too early, I think, wouldn't really help. In terms of really getting the economy back up in that sense. So my view on the euro dollar, it's still pretty range bound. I wouldn't say seasonally, but I think in this so-called climate where everybody's a bit bearish on the US, there is a bit room for the upside, but it's really a very I would say limited upside, where I think the limit is 120, unless there's a new policy that unless Lagarde or someone steps in and says that, okay, they're ready to do something, and then we'll expect a difference. If not, I think it's going to be a tight range for at least a couple of weeks, unless something big changes. All right, and that's why if we look at the inflation index in terms of so-called statistics, you can see the euro isn't doing as well, but it is kind of a lagging indicator right now. It's very sentiment based trading that's happening, and even when we look at the UK side, you can see things like this. One reason why the British pound really tanked was because of the so-called Brexit. The Brexit story has returned to the headlines. All right, it was kind of quiet for Brexit for a while, but now the Brexit story is back. So I feel there is a lot more sentiment trading at the moment because a lot of speculation on who's going to say what, a lot of noise in the market. So I will recommend that. If we just look at inflation numbers, just based on numbers alone, the UK does have a slight recovery in inflation, which means it's a slight recovery in productivity in at least in their domestic market. So I wouldn't tank on the UK yet. This might just be a huge correction. It might be a sentiment move, but I am still pretty sure that the UK is not going to go to the ground unless they confirm that there's a no Brexit deal or something big comes out. But it's a lot of sentiment noise in the market, and that's where I think I always turn to the technical analysis side to support the fundamental bias that I have. So my chart I'm looking for next week is mainly I still like the euro dollar. I'm still looking at the euro dollar. I'm still looking for SG. I'm still looking for dollar Sing shorts. All right. Again, fundamental analysis plays on medium to long term. So it's not going to happen in a day or a week. It might take a couple of weeks or a month, but I do like the technical aspect that kind of backs the fundamental story until the US does something different, or at least until the election where we have a bigger sentimental play. Singapore, in terms of recovery, it's still pretty decent. So I do see still a little bit of strength in the Singapore dollar, at least. I think the most it can go is 1.35 because the government is really tight on the range as well. So yeah, my two charts are still euro dollar and dollar Sing. And of course, I'm looking at pound opportunities to go long after the deep correction, which again, the correction might happen a little bit longer. This is just the BXY, which Lloyd will probably talk more about later. Okay, big tanking down on the daily time frame. So, again, we're at a very technical area, so I will be looking for opportunities to long the pound, but if it fits the technical analysis that kind of fits the fundamental bias I have. So fundamentally, I'm still a little bit long in terms of the pound, but I need a technical signal before I actually jump in. Yeah, that's all for me next week in terms of what I'll be looking at.
It's Alexis, pretty interesting stuff. So at the moment, inflation is higher in the US than in the other developed markets.
Yes, so it's really interesting because you're looking at the stats in terms of inflation, it really seems that it is kind of higher. At least it's progressively higher, in fact. So it's pretty interesting in that fact. So I don't see that the US. I mean, no matter how the dollar bears are coming in, I still don't see it going down too far because it seems that productivity is still kind of surviving in that sense comparatively to the other economies in that sense.
It's certainly hard to justify an interest rate cut further, isn't it, when you've got inflation coming? It's interesting. You'd expect if they'll be pleased to see inflation. Inflation is the friend of the indebted, and they are indebted. So inflation can only be a very, very good thing for them.
Yeah, correct.
Look, yep.
Yeah, there's this. If you guys, you can just Google the monetary policy of the Bank of England. It does give the UK's so-called targets or what they might want to go towards. And that could also be a reason of how far they missed the mark, and that's where the sentiment pulls the currency down because they're quite far off from their so-called targets in that sense.
Yeah, fair enough. We be interesting to see what does come in the UK this week. It's a big sell last week on that pound, and obviously some uncertainty about Brexit and some monetary policy stuff is all at play in that market. Look, we will try have a bit of a chat with the team. We are waiting for Julian to join us. I know he's doing his small group coaching tonight. He's got he coaches a group of 4 people once a week on a Sunday. It's we get about 12, 15 people a year into his program, and he is presumably still finishing that off because he isn't in here yet. So I'm just going to have a chat with the team around the week that's just been, and we might start with Shukri. Shukri, are you around?
Yes, I am.
Mate, tell me the story on crypto this week. I've just been in my weekly chat with the team, and Ash has told me that he's reasonably bearish on FTSE in the short term. What are your thoughts?
Let me show you the screen now. Okay, I have my Google Chrome here. I'm going to share this. Okay, Paul, this shows you the Bitcoin fear index. Yes, people have been fearing, so it's here. But this is going to be updated in another 14 hours. So everyone's waiting for this because in the past earlier today, everything has seemed to flip. Now, it was always in the making, okay? Now look at CoinMarketCap.
Hold on a second. Back to that page.
Back to this.
Look, do they just put an arrow on a chart and point it at something, or is there some way they measure the Bitcoin Fear Index?
There is a methodology here. There are more sellers than buyers. Buyers are getting liquidated all over the place, meaning stop losses are being triggered. You see that? People were so confident, and then it suddenly went down because Bitcoin suddenly went down from 12.
Oh, yep.
But today, things, or it started the past few days, and I'll tell you the story about it. It's really a sentiment story. It's different. So if you look here at the market capitalization, it has shot up from like 330 to 349 again. But what's more important is this Bitcoin dominance. See, so as the market capitalization goes out, I think during our first show, this was showing 57. It's now showing 55.9, which is good. This means as Bitcoin goes up, other smaller coins are also going up. So, this is a boon for not only the Bitcoin trader, but also crypto traders, because, crypto trading and Bitcoin trading are two different things. You have a Bitcoin trading strategy and you have a crypto trading strategy.
Mate, on that list here, you've got Bitcoin, Ethereum, Tether, XRP. Is it? Which one's XRP?
Yes. Here, Ripple.
Ripple, that's right.
Yes.
Yeah. Binance has got their own coin now as well, mate.
Yes, this has gone up by a lot because when I bought it, it was only like 21.5. 21.
Okay.
Yeah, so it's good. Okay, so this is part two. Now let's see what's happening now. Take a look at this chart at Bitcoin. Take a look at that. Take a look at this chart. It looks like something here. It's a disbelief rally. So if you look here.
So let's go back to that just quietly. Let's go back to that just quietly. This is the sentiment cycle, right?
Yes, correct.
Sentiment cycle, right?
Correct.
Gosh, what was his name? I wrote that terrible book. Okay, yep, got him. Yep. So this is the sentiment cycle. Yep.
This is a sentiment cycle. And I'll show you what happened after once it goes past this, because now we are in a state of belief and disbelief. And let's go into detail why we're in the state of do we really want to believe this? Okay, it's gone out of this downward trending line, but is it for real? And I'll tell you why. Let's go here to the daily chart now, because look, it was threatening this level for so long, and this is the critical level. Every time it dipped below 10, it went up again. Every time it dipped below 10, and remember, Paul, I was saying about the CME gap. The gap is filled 95% of the time. Now, let me tell you what happened, because this is a very important story. So listen up. When Bitcoin was going up, everyone, almost every crypto trader said that, okay, this time it's different. We're not going to fill the gap. We're not going to go back down. Now, Paul, you've been here long enough. When people start saying that, you know what happens, right? This happens, okay? Yeah. And look what happens here. And look at the CME gap here. Look at that. That was the CME gap. I don't know whether it's filled or not, but I think it's already filled. But and this is a nice head and shoulder.
Interesting, Shukri. Without being an authority on Bitcoin, I'm really not. One of the things that Bitcoin is, it's a deregulated industry, and it's got some pluses and some minuses, but it means it's got no centralized exchange like Forex. And what that means is that different charting of it, the price of Bitcoin in Indonesia is often just a little bit lower than perhaps the price of Bitcoin in Singapore. I don't know if you know that, but it just is a little bit. which means that these charts, where they're taken from, could have some slightly different pricing. So when that gap doesn't quite close, and look, your bottom of that gap's off the top of the body of the candle, boy, off the top of the wick of that candle, that's pretty close to closed. And I think that's probably, you could put it inside the statistical error of being uncentralized and say, look, for me, that's closed. That's a closed gap. Look, it's one of those things. If it look, at some stage in the future, it'll close that gap again. But for now, that'll do. Mate, we'll come back and do a bit more on crypto. I'm pretty keen to hear your direction on this. So I'm getting that you're bullish, and it'll be really interesting to hear some more on that. We're going to go to Julian in a minute and talk about his view of the market. I think one of the things we're looking to do is, and thank you very much for that, Shockley. We'll come back to. I know Geoff's on the show as well already. Ainslie's in already. It's nice to have you guys here. But we will go to Julian in a moment, and that is weird. Okay, we'll go to Julian in a moment and say hi to him and hear his view on the market. We'll come back to Shukri on the scheduled time into full cross on crypto. Thanks for helping fill the gap for us, Shukri. It was quite useful. Cheers, mate. Look, our next guest is a professional trader, been in the markets now for nearly 30 years, worked throughout Europe. Julian McCree, still in the market. How are things today, and what are you looking at for the week ahead?
Hey, Paul, and hello, everybody, wherever you are in the world. It's always good on a Sunday night to have a quick scoop round and let you know what my thinking is for the following week. And pretty much to give you an idea sometimes about what my thinking is more long-term as well, too. So I'm going to start tonight with the long-term. I think the key things that for me have changed the world almost 180 degrees for me is the swap in Fed policy from really targeting inflation above all else with an eye on unemployment to targeting unemployment with an eye on inflation. And I think that has been a complete shift. If you combine that with a relatively lax government policy compared, it can, when you consider their fiscal policy, let's call it a relatively relaxed fiscal policy in the States, I think there's going to be some very interesting fireworks over the next 3 or 4 years. And one of the challenges is going to be that I think all of that is probably in the medium term dollar negative. However, and let's talk about the second thing. Well, maybe I'll talk about that in a second. Let's just call that dollar negative over the medium term. Now, one of the challenges with that is, I was talking to my wife about it, by the way, at breakfast this morning. This is what we talk about on a Sunday morning, as where she's doing her Sudoku and trying to look interested when I start to kind of go into one of my rants, is that I think the key thing for me is that how everybody else responds. So we've already seen a response from Lagarde at the ECB. I've also seen a response from the local RBNZ, which is the Reserve Bank of New Zealand governor as well too, who's been on the tape saying, actually, hang on a second, we've just had a dual mandate here as well too imposed on us, which is also about unemployment versus inflation. And his description of it, I thought, was very lucid when he turned around and he said, well, I think people would rather have a job and worry about a little bit higher inflation than they would the other situation. So when you look at this, it's really important because, and I know Paul's sitting there with a gold chart up in front of him, the impact is going to be a reach for inflation-based assets and inflation-based hedges for investors over the course of the next 5 to 10 years. However, the however to all of that is that's over the course of the next 5 to 10 years. In the meantime, the Fed's got to generate anything that even resembles aggressive growth and anything that even resembles a sharp uptick in employment and a decrease in unemployment. At the moment, the Fed appears to me to be fighting deflation and not inflation. So with that caveat having been said, we're now sitting, I think, on a quite interesting juncture in that let's look at the gold market to start off with as being our poster child for the non-dollar assets and say the non-US dollar assets. And this chart's been going sideways at what really ought to be or is a very seasonally bullish time for gold. So pretty much the whole of September, late August through September, the gold market should be rallying, and it isn't. It's going sideways. So I'm going to put if you like, a little pin in my expectations of where I think the gold market ought to go watching the price action incredibly closely. I have a real passion to hate triangles, and we're clearly, as Paul's doesn't take 2 seconds to demonstrate, I'm sure if you put a couple of trend lines in, you can see that triangle forming there. And I hate them with a passion because I think they're so difficult to trade. So subsequent to that, what we're going to do with gold is we're going to do something called watching it. And we're going to wait until something happens. I have a bias to be long because the seasonal is supporting that at the moment. And this is one of the most seasonally bullish times of the year for gold, the next week or two. So I'm really conscious of that, but I'm also conscious that we're in a triangle, and triangles are and nightmares to trade. So we'll see what takes place. So watching it like a hawk. And I think that's the message I want to bring to this week, right? We've got the FOMC, which is interesting. And Paul, if you could put a chart of the euro up after that, and maybe we'll just go to that and have a quick look at the euro. You know, what we need to really do here is to try and say, okay, well, we're very aware that from a commitment of traders report, and also really from just a little bit of sentiment as well too, that we've got a market that's been rallying like crazy for a very long period of time in the euro, and it's just recently put what you may call the potential for a topping action in place. Certainly this consolidation has been quite, I guess, not necessarily boring to trade, but it's been difficult to believe that there's a follow-through trend coming from here to go again. It probably risks more either further consolidation or a move down. So given where the commitment of traders is sitting, and the commercials are very short across a number of different currencies, I can only really believe that at this point in time, I'm looking for either false breakouts to the downside or a stronger trend to the downside on a breakout point of view. So I'm looking for a failure. I'm looking for the US dollar to rally, and that's my thesis for the next week or two, certainly the next 2 weeks for sure. And we'll see how that spins out. And that's just not in the euro. That's also in dollar CAD. It's also in some of the other currencies as well too. You've already seen sterling come down this week, or so the cable rate. So sterling US dollar has come down dramatically this week. In other words, the dollar has strengthened significantly. And I think there's a risk. Here we go. This is dollar CAD. There's a risk here that both dollar CAD and the euro fall. So dollar CAD will rise, the euro will fall from its current 118 down towards that 114, 115 level. And I think it'll go quite quickly as well too. But when it goes, it'll go quickly, but I think it might take a few days to get going. So the FOMC, post-FOMC could be the trigger for that to start happening. I don't think anything's going to happen before then. I might surprise me, but I suspect not. But just keep a very strong lookout. Now, then the question is, which one is the most bullish for the US dollar? And I would probably punt that one, Paul. Thank you, which is the dollar CAD. Will be the one that I'd be looking at. Again, this is really straightforward. You know, the price action that you can see there, any type of break of that large green bar, the higher that large green bar is pretty bullish, and will walk us all the way back to at least double the range of that bar, which would be up at about 134-ish, something like that. As being a target point to get to. So that's quite a fair way from here, right? Yes, vaguely something like that. That's potential, right? So up in the 135s as well too. You know, I don't want to call levels because I always hate trying to predict where price is going to go. We'll just see what happens when we get there. But I think the opportunity for reversing the dollar is pretty strong over the next 2 weeks. So there's my theme, Paul. When I look at other markets that I think are really interesting, do you have platinum on this, Paul?
Yeah, look, I do, Julian. Someone might need to just jump in the box. What is it?
XPT.
There it is, XPT. Let me open it.
I've just come
off my desktop onto my laptop for this show, so I can have a camera and a few other things. And it just means that I don't have anything set up. I've just put this on.
Don't need it. Just a weekly chart's great for me.
A weekly chart on platinum.
Yeah, thanks. Okay. So what we're entering now, and the reason why I've put this up, what we're entering now is the seasonally most bearish time for platinum of the whole year. So Why is that important? Well, platinum is a precious metal, and as platinum goes, often gold goes. Again, if nothing happens to platinum over the course of the next 2 to 3 weeks, then you sort of go, well, that's interesting and not very useful. But from my perspective, I'm also looking for platinum to come off quite aggressively because the seasonals are very bearish this time of year, and the commercials are also short. So there's probably a bit of a 1-2 there that we'll see unfolding. So maybe it might not be gold that suffers; it could be some of the ancillary ones around it that suffer. And I guess the other thing that I'm also looking for as well too is a follow through on the initial sell off in the Nasdaq. We've been talking about being nervous about equities for a couple of weeks now. Actually, more than a couple of weeks, more like 3 or 4.
Sorry,
this
mate,
is a crazy.
I was just posting something. Nasdaq, right?
If you have it,
There it is, mate. Nasdaq is there for you, mate. A little 4-hour pattern short at the moment, isn't there? Interesting on the Nasdaq.
it is, and I suspect we're probably going to, because this is an index, we may end up bouncing. We'll probably try and find some support somewhere. It's probably going to be around about here. This is a pretty busy area for support and resistance. Who knows? Because the Nasdaq is the Nasdaq, but I would suspect a bounce from here, and I think that bounce has got to be sold. What worries me is that we don't get a bounce because there's something more serious happening on the downside, which then suggests that we're experiencing the beginning of a blow-off top in the stock market, certainly the tech stocks. So bear that in mind. I haven't seen the exact numbers, but I believe Tesla's off something like 30% from the high. It's not a investing market when things move 30% in a week or 20% in a day. That's not investing, that's trading. And you can't hold a position in Tesla stock for years and years if you're going to have that type of volatility occurring over 2 days. So you just can't. So just bear that in mind. And we do see this happen from time to time in the stock market. For those of you that remember the cannabis stocks of a few years ago and Beyond Meat, so the meat replacement stocks of, I think that was last year's rally. This year it happens to be Tesla and 1 or 2 others. It's made them into quite large companies, which I think is an outrageous valuation for Tesla. I absolutely love EVs and I'm a massive fan of them. I have 2 of them myself, but I do not believe in the price of the stock being anywhere near this type of valuation metric. I just can't make any sense of it at all. So yeah, that's a slight aside, but I think that also plays to that dollar strength as well on people when they get a bit worried tend to buy US dollars. They might not buy the individual stocks, but they might buy US dollars as a flight to quality. So just bear that in mind. So,
sorry, Julian, a blow off top. What's a blow off top?
A blow off top is just, well, Paul, if you'd like to expand the NASDAQ out to a weekly chart or a monthly chart, I'll show you. A blow off, we might have to go a little bit further back than that. Have we got there? There we go. So a blow off top is exact. So don't forget, this is a arithmetic chart, not a logarithmic chart. So if you look at that move we had in 1998 and 2000, where the market went from 4,000 down to 400, so it lost almost 85% of its value. That's what a blow off top looks like. So that's just saying that the Nasdaq from here is going to go down to 2,000.
So what you're saying with the Nasdaq here is that the real danger here is this kind of pattern where we see on a decent time frame this lower high and quite a decisive move off it because it just
correct.
So
we're a long way from any type of that type of price action unfolding, right? Months. It could take months for that to happen. And what we do know, and these are the key things, is that a lot of the rally in the last 5 months has been driven by a number of large players investing in significant amount out of the money call options. Everybody's, I don't know how much your guys know on this show, right? Because we tend to focus on foreign exchange, but there's been some wild and wacky things going on in the US stock market around call option buying. So out of the money calls by a lot of private individuals and also some large players as well too has led to the rally of the last 3 months. And so think about the average volume over the course of a year, I think being about $100 billion. I think this year it's running at $300 billion in those call options. So massive factors of volume different, and that's caused this market to rally.
Okay, mate. That's sorry, mate. Can you give a really short explanation of a call option?
Yeah, so a call option is the right but not the obligation to buy something at a particular price. So it's a bit like saying the price of Tesla today trades at $300. I'm going to buy a call option at 350 for 3 weeks time. If the price in 3 weeks time is $400, then I'll exercise my right to buy at 350. If the price of Tesla is $300 in 3 weeks time, then my option is, if you like, out of the money, so to speak, and I'm better off buying at that lower price. So because I have that right but not the obligation, I pay a fee for that, a premium for that up front.
Yeah.
And that premium is the key factor behind what that option is worth. Well, it is what the option's worth, and that premium is based on a number of things, but most notably the distance from the strike price, so and the current market, and also the volatility in the market moment. So you can understand with these type of price movements that you're seeing on the screen, the market's quite volatile in some of those single stocks. We use Tesla as the example. I think it's running at about 40% in Tesla, which is quite high. And
Yep.
it's that prices up those options quite aggressively.
Okay, mate. I like that. We might do a bit of stuff on options not far away, Julian. We're talking to a guy to come in and chat about options. But look, I know that next Sunday you and Ainsley are doing a couple of hours with the mentorship students from both organisations, all levels of mentorship students, a couple of hours for free before this show. My recollection is about 4 p.m. till 6 p.m. Sing, have I got that right?
I think you have. And
2 p.m. to 4 p.m. Sing. 2 p.m. to 4 p.m. Sing. Finishing at 8 New Zealand, aren't we?
Yes.
To get ready for your one-to-one coaching session, right? One of the things, I know you've got a couple of topics, but this options thing and how to hedge the forex business would be an interesting chat. I don't know if you can do it in that one, but we do need someone to come and talk to us a bit more about how to options and future strategies around sitting in with your forex trades.
Yeah, look, there's quite a there's a heap of ways to look at options. Some of them can be quite dangerous because it requires you end up betting quite a bit of capital. Yeah, the returns sometimes are amazing. This is how people turn $15,000 into 15 million in 20 seconds type of thing. And I do get all of that. But actually, what tends to happen, interestingly, is most traders tend to fall into one or two camps. They either trade options and they love them, or they just leave them alone and just trade the straights, as we call them, which is the underlying instrument, because that's fine for them when they've got all the price action and the trading success they need just looking at those. So I've looked at options late on in my career. I wasn't an options trader early on. I'm a relative fan now, but I think it comes with a lot of yes, and it's a very dangerous game for the beginner.
Mate, I've got a question from Dominic. I'll read it to you quickly. The elections this time around seem different. What is your take on it, and how will it change the game on dollar and the S&P? Now, Julian, if you can let us know that, we'll all just go and place our positions now and become millionaires for the next 5
exactly.
Yeah.
And I am making the assumption you're not talking about the New Zealand election, you're talking about the American one.
I think he's just being polite. We all know New Zealand election's the big one coming up, but there's the other one as well.
I think there is something happening in November. I just don't recall what it is. This time around, the answer is we probably need to focus on it much more than we usually do, because it's quite important. As a trader, elections used to be really boring for me. Who cares? Because the Fed's the only people that matter. This time around, that is not the case. There's a structural and secular shift in government policy going on, and there's two camps about how that should unfold, the Republicans and the Democrats, and therefore you've got to be across it, because there will be policies that come out of both camps which will be markedly different depending on who wins.
Look, I think as traders as well with this stuff, Julian, you've got to be really aware of the world that you live in. If you start Googling and searching, or Facebook searching, reading, for instance, anti-Trump stuff, they will keep running that down the feed to you. And you will get a feed which is distorted in favor of the opinion you have in the first place. And you will take into this election beliefs which are supported by articles which support your belief and aren't impartial. It's really important, if you are looking to follow this election, that you find a way to see if you can get both points of views, or some balanced points of views, and this kind of stuff, because otherwise your social media and your news feeds will simply reaffirm what you believe. And that is a dangerous place for a trader to be.
It is, Paul. And look, I've got another, this is very interesting, but is it going to make, I keep coming back to the same thing in these debates about the election. Is it going to make us any money?
Well,
and from my perspective, I don't have a political edge. I maybe after 20 years of looking at markets and having an economics degree, I've got a small sense about what might be coming next. But that doesn't affect my trading decisions on the week.
it's tough in the election, isn't it? Helen was just asking what you meant by, let me see if I can bring this up again. So my chat box, as always on Zoom, just disappears. What does Julian mean by structural and secular shift? Julian, what you're saying is there's going to be there's a change in the policy and the way the country wants to be run, right?
Correct. So this won't last months, it'll last years.
And the big question facing the world really is when you borrow money from your own reserve bank, are you able to renegotiate those positions and lengthen those loans, perhaps write some of them off? And will countries choose to do that in the future? It's going to have a massive bearing on things moving forward. And that's a debate that I don't think that the world will even have for another year. We've got to borrow the money first and try and get out of this situation we're in globally.
Yeah, you're absolutely correct, Paul. There's a difference between relief borrowing and borrowing just for the sake of it. They're two completely different things. I'm pretty certain at this point that most governments around the world, the minute the economy recovers, will stop borrowing additional money.
While I think that's completely right. The thing for mine, and I just wonder this, is will they pay it all back? And or will they just stretch these 10-year bonds out to 30-year bonds or 100-year bonds and just push these payments out at nearly no interest rate over a massive period of time to soften the upcoming tax blows? And as long as people are going to elections saying that there's nearly no tax change coming, I don't think they have a genuine belief, a genuine intention right now to pay those bonds off in the time frame that they're borrowed in.
Again, it's an interesting point, and I always say with these things, governments are cheapskates, right? So they will look at the 2-year rate and they'll see 1%. They'll look at the 10-year rate or the 30-year rate and they'll see 3%. And they go, holy crap, well, I don't want to pay 3% interest on this. I only want to pay 1%. So I just borrow it for 2 years. So I think you've got to always be conscious that governments are rational actors at the same time. Well, vaguely rational actors. No, actually, they're not really. The Treasury is a rational actor. Nobody else in government is. Sorry, walking back from that statement really quickly. The Treasury is quite good.
Yes, agree.
And I think that following on from the Fisher article that came out in 2018 by the Fed, I think the Fed is almost working to the Fisher playbook now, which is I expect to see yield curve control coming in on the bond markets out to 5 years, similar to what the Australians have done, and a real meaningful shift in the way they look at inflation, right? So they don't care if inflation's 5, they really care if unemployment is 9%.
Yeah, it's a different world, isn't it, Julian? I mean, inflation's good for the borrowing, unemployment's good for nothing.
Yeah, just remember that 5% inflation over a 10-year period and 5% inflation per annum is not really a lot. It's going to depreciate that whole debt that they have by 60%. Yeah. You solve a lot of problems in that time.
Yeah, you really do. It'll be interesting to see if we get it. I'm a believer that we're heading for it, and we'll wait and see whether we do or not. Mate, I'm just having a look at my timetable. I'm a few minutes away from supposed to be with Shukri and Ainslie and soon to Lloyd. Any final thoughts? I wanted just to confirm for people who are listening that you are doing you and Ainslie doing a free hour next Sunday with the mentorship students. Details of that will come out on Monday and Tuesday straight into the mentorship chat areas. You've also got your coaching session where you're coaching 4 individuals. You coach 4 individuals a month, and we do have one spot on that for anyone that's interested. Well, you can. We'll talk about that next week as well, right?
Yeah, absolutely. We don't. Paul and I, we've talked about this a couple of times, and we launched that mentoring program, the coaching program this year. I don't do this very often. It's something that I've got a bit of bandwidth for this year, and I've trained and mentored probably walking to the hundreds of students, but let's call it tens for sure, over the course of the last 20 years. And I think pretty much most of them have benefited from this. So it's not something, this isn't a program which I run very often. But like I said, we have a bit of bandwidth this year, so we're doing it. And I think the people who've been on it this year have really benefited so far. And I hope they have anyway. My sense is in fact, I know they have, because we've just finished a session now and it was a completely different set of people compared to the ones that we were looking, same people, but compared to where we were 3 months ago, completely different way of thinking and totally professional, much different to those people that came to see me 2 or 3 months ago. So I'm stoked for them because they're turning into professional traders, which is awesome.
That's what it's all about, isn't it? And I guess the two people you've mentored inside this organisation are myself and Ainslie, and I think that puts you in a pretty good place. And I know you've done plenty of others, and the group you've got at the moment are pretty happy. So we do have one spot, and we will get more information out about that next week, and we will have a decent chat with you, Ainslie, and the mentorship students next Sunday afternoon. So if you're a mentorship student, please block out some space for that. Again, I think it's I'm sorry, I do these things in New Zealand time. I think it's 2 p.m. to 4 p.m. Singapore next week for that. And Julian, cheers, mate. If there's anything else, if you want to jump into anything along the way, feel free to jump into anything else along the way.
No worries, and thanks for the time, Paul. Thanks everybody for listening.
Cheers. So next up is Sukri. Sukri is our cryptocurrency expert. Sukri, we'll pick up from you from earlier. What's coming up in the crypto market? As I was saying, I'm hearing stories of a little bit of Bitcoin weakness to come. What are your thoughts?
Okay, let's share the screen again, and I'll show you my thoughts. So we're going to cover Bitcoin forecast, Bitcoin trading strategy. Let me share you now. Okay, we continued just now. So clearly, I think, Paul, people were quite worried that it would challenge this. It obviously has cleared it. We're well on our way up. So I think it goes up, and the resistance is somewhere here, 11.3. Now, why do I say 11.3? Because there's the Fed on Thursday, or Malaysia is Thursday morning. So that's a concern. And as Julian said, maybe the euro is due for a correction. Again, remember, guys, whenever Bitcoin goes up, dollar index goes down, and vice versa. And this is very important, even if you are Bitcoin trading and you're a beginner, okay? This is so crucial. So once it gets through this, let's look what happens on the sentiment cycle. It goes up like a rocket, but still, this is theory. We have to check what happened in the past. And let me show you what happened in the past, because this is the third cycle of halving, where the rewards for Bitcoin go down. So Paul, instead of inflation, Bitcoin is actually deflationary, okay? This is in reverse to another set of tokens now, which is the hottest thing in crypto now. Paul, you've heard of it. It's called DeFi. DeFi is different. Yep. It's inflationary. I know this is weird. You guys will get this, okay, in the next 2 or 3 weeks. But, you've heard of crypto being deflation, cutting out the rewards, and then you have suddenly being turned over by some inflationary tokens. So like Julian said, there's some wacky things happening in the options market in the US. There's some wacky things happening in the crypto market too. So you look at this is 2012, 2013. Look what happens after it breaks off the high. It goes straight up like a rocket in 9 months. And remember, there's something like a triangle here too. Look what happened in 2017, 2018, and there's something like a triangle here too. Once we go through that high, once we challenge that and beat it, 9 months going high. So guys, the thing to look for now and it will probably be around next year, look for something around 19 to 20K. Because once it surpasses that, remember this, it's going to go up for another 9 months, just straight like a rocket. And then what do? We dump. Don't forget that, okay? Once you're there, please just dump it. That's it, okay? So that's in Bitcoin. So that's the Bitcoin forecast, Bitcoin trading strategy. Now, what about for crypto trading? You guys have to remember that there are two markets here, the Bitcoin market and the crypto market. And the crypto market in general, what we call the altcoins, are defined by Ethereum, because Ethereum is used for DeFi. And you look at the key levels that I've drawn out here. So I'm going to go to the daily chart. Okay, we broke that critical level of around 360. And we went up to 305. And guess what? Even I was quite surprised. It just blasted past it again. So this shows that there's something going on with the sentiment. People are taking risk now. In fact, to me, people are taking unreasonable type of risk, but I think everyone is betting on inflation, and I'm glad to the two things that make me very happy today, Paul. First, you said that is considered filling the gap. Thank you very much. Now I'll go in with confidence. The next thing is Julian said, we might have 4 or 5 years of this inflation thing. The only thing I'm worried, Paul, about this is I would make too much money. 4 or 5 years is a long time in crypto. Okay, that would be too much money, but let's see how it goes. That makes me very, very happy.
Things, Shukri, people of my generation, we're just used to living in an inflationary world, and we know how to make money from it. And look, it's not very complicated. You just buy stuff in an inflationary world. You honestly, it's hard to think what you can buy that's not going to go up in an inflationary world. And a lot of the younger investors at the moment have lived in a sideways inflation period or a very slow inflation period, and they work a lot harder for their money. But in all honesty, you're right, Shukri. If we're going to have 5 years of if we're going to have 5 years of inflation, we really should better pick up some money on some indices, some Bitcoin, some commodities. All of those things should be, if we're going to have 5 years of inflation, they're all going to be at double what they are now 5 years from now. And, we will happily jump in and take a bit out of that. No trouble at all, right?
Great, man. So, Paul, this was in the 70s, right? Because I was very small then. 70s, early 80s, I didn't know what was going on.
I don't actually remember exactly, but I think they started really curbing inflation in the early 2000s. It's more Julian's thing than mine, but I think they got onto inflation in the early 2000s and started to put all these bans on it. They just started, it's interesting because, it's very, very hard economically. And again, this isn't my area of expertise, but it's very, very hard to control one part of an economy and not others. And to control inflation and presume it's not going to create issues around growth is, it's a bit hard to actually do. And, we'll see what happens when. I'm actually quite pleased to see them focusing on unemployment and reducing the emphasis on inflation. I think it's been too much. I think those bands could have been a little bit wider, and they could have been a little more positive about wanting some growth in their economies, as opposed, we're all concerned about international competitiveness, but if you have inflation, your exchange rate, which is floated, will eventually make you internationally competitive anyway. So inflation is not the end of it for you on international competitively. Gosh, I'm talking economics. I don't know why I'm doing that. So good times coming for crypto as far as you're concerned.
Very. So look at this. Okay, that's the next resistance for Ethereum. Now let's go one level lower. Okay, we got to see what the market is doing. What are the participants doing? And let me show you something. Look at DeFi. 1st June, there was 1.19 billion locked. It went up to 9 in 2 months. And suddenly it dumped, and now it's going back up again. And then let's go down in.
But just for others in the room, Shukri, what's DeFi?
Okay, imagine a bank, right? Imagine a bank. A bank gives you like what?
Nothing.
1%. In Malaysia, we give 2. We're kind here, okay? So I'm in the 2% regime.
Right now in the world, banks give you about what they charge you in fees. They give you an interest rate and they charge you in fees, and you're about net for the experience, right?
So if you heard about crypto, it's always being your own bank, right? So you can put crypto in a bank call a DeFi pool, and you earn interest from that. And you know what? This week is all wholly dedicated to DeFi, so don't miss this, okay? Crypto traders, don't miss this on Monday and Wednesday. And as I promised, I'm going to show Geoff's farm on Wednesday. And Wednesday is a key day because I'm going to show you real accounts, okay? We will together calculate the interest, and I'm going to show you my strategy there.
Mate, what's this AAVE dominance 18.64%?
Which one?
Next box down.
Aave is one of the dominant coins here. It's actually here, Paul. It's somewhere here. It's Aave. It's actually one of the leading coins. There it is.
Yeah.
70. This coin is something like it goes to 50 cents, just buy it, and it goes back up to 60, 70. So very, very, it's like Bitcoin dominance, where Bitcoin is dominant in the space of crypto. So when it comes to DeFi, it's Aave or YFI or all that.
Okay.
Okay.
You're going to talk DeFi on Monday and Wednesday in some detail.
Don't miss it, because you guys got to hear this. This is like living in a new banking regime now. So let's see what these investors are doing. So this is, you know, the IPO is called an IEO for a coin named Staffy. Now, I want to show you something here. Look, the last token price for private investors was 13. Now, they had an auction this week. I think if I'm not mistaken, it was on Wednesday. They offered it at 21. It was taken up at 21. And then they had another auction, and the bid price was $1. And people took it out at $1. You know, I thought that was crazy. Like, hey, it was 13 cents. Okay, I'll take it at 21. But what business do you have taking up at 5 times the price of the last auction? Would you take it up, Paul? Isn't this insane?
That sounds insane.
That sounds insane. Now, let's look at what happened at Staffy, right? It went up to over $2. Like, hello? So this is like insane. You know, it's like people are buying because, yeah, it went up to 228. People are buying because, hey, let's buy because it's going to go up some more.
I've got to say, that's the best reason in the world to buy. Look, a market cap of it's 12 million. Do you think it's been a pump and dump? Do you think some people have pushed it up and sold it out?
Yes, usually for things like this, it will pump, it will dump, and then you can buy it again, because this is a very good coin. This is a very good coin. Now, let me show you, Paul, something even more crazy. Now, I didn't go into this. I was
one
waiting.
Last thing, Shukri, we've got Ainslie waiting through gold. We've got Roy waiting through currency strength. We've got Geoff waiting through currencies. Going to do some trader chit-chat with the team. So, yep.
So don't miss it, okay? So again, even I'm moving my coins in.
Say Monday and Wednesday. We're also having a day with you, aren't we?
Yes.
26, isn't it? So we're a couple of weeks away,
26.
less than 2 weeks away from having a day with you on crypto, where you're going to teach all the crypto basics, right?
Yes, Bitcoin trading for beginners, crypto trading for beginners. And this is for real. You're going to get a real wallet. So we're going to move some real cryptos around, because they open on Saturday and Sunday. Crypto is 24/7, 365.
Honestly, mate, I know that sounds wonderful to you, but I just think, well, when do I have a break and sleep if it's open 7 days a week, 24 hours? When's my rest time if that's the case? Mate, is there one last thing from you?
That's it.
We're done?
Yeah, we're done.
Cheers, mate. Look forward to your show on Monday and Wednesday. We'll talk to you again next Sunday as well. And look forward to the full day on the 26th, where we introduce our people to cryptocurrency. That is a good thing. Look, next thing we're going to do is talk gold with Ainslie. It's been a big couple of weeks for Ainslie with a couple of house moves in the period. I think she's in. I think she might be on what we laughingly call in our world Australian internet, which is internet that doesn't really work. If you've ever got a spare 2 or 3 days, you want to ask Geoff what he thinks about internet in Australia. It's always good fun. Yeah, Ainslie. Not only is it a triangle, and look, you could tighten that triangle up quite a bit. Not only is it a triangle, but it's just what was going on here? I mean, there's days here where it's just not going anywhere. I don't like dozy. It just makes me feel as if, as if nothing's happening at all.
Okay, while it was going doji, I was moving house, and I've been moving house. I moved out of one house, didn't have anywhere to go, so the girls and I, my 2 girls and the dog, bunked down at the Intercontinental for a week and a bit, and we've now moved into a house. But I'm unpacking boxes, and I'm hotspotting phones and trying to get internet on quickly with Telstra in the same sentence is impossible. So in a way, I'm sort of happy about dojis.
That is brilliant entertainment for the rest of the world. When you got anyone in Australia putting the internet on, you are guaranteed hours of humour. Anyway, let's go gold, Ainsley. Where are we going?
Gold has gone sideways, and it's driving me nuts. Apart from the fact that I think I'm on a run and I go off and do life for 24 hours and come back and look at my phone, and it's gone up. It's done a really good job and turn around and come back down again. This is not what it's meant to be doing at this time of the year. This time of the year, it's one of the strongest seasonal rallies is September. My other one is from just after mid-December, but this is another one that I'm looking at that should have rallied, and it's not. Now, that's even given a presidential cycle. It should be, even on the presidential seasonality cycle, it actually should be a stronger rally than with the other 3 years. And look at it.
Yep.
Look at it. It's just it's just bleh. That's look, I don't know, and with
So
hats off to Geoff. He must love this. If he would trade gold, he's probably made quite a bit of money in this last couple of months, but it's not, and it's not going anywhere, and it's driving me nuts, and it's not doing anything, and all we're getting is a tighter spring. And we just don't know. I need more information.
I'll tell you what, Ainslie,
Like,
what I'm going to
yeah.
ask you, and what we're trying to do is give our people a bit of a steer on it. So what I'm going to do for you is I'm going to draw on it. And I'm going to ask you a question around it. Okay. Now
You
this
draw,
isn't.
oh God, shapes. Here we go. It just, yeah.
We need to get a break of that and a close outside of it to have a direction here, Ainslie. So when
We
you say
do.
you're waiting, this is what we mean, right? We want a bar, we want a daily bar to close below here or close above here. Preferably give us a retest of a level, and look, it's a range. You can put the top there, you can put the top there if you really want to. I think you can make a case for putting the top down there. It's got a couple more touches through here. You can call this a false breakout, an attempted false breakout. So you can tighten it up a little bit. But what we really need to do is see a close above, a little test back, and a little A advance, B back, C continue, A, B, C. And look, the alternative, I guess, for some people, if you want to be really aggressive, one thing you can do, I think, in this range right now is buy the bottom. If it wants to pop down here and give you a reversal bar on a 4-hour chart, I think buying the bottom of this range. If you're bullish, I think that's a reasonable option too. Any
Okay,
thoughts,
one,
Ainslie?
yeah, I agree with that. If you want to be just to have a few horses backed in on that one, yes, I would buy at the bottom of the range. You probably find if you looked on a 50 moving average, you'd find that some of that is bouncing off that as well. So, and obviously with gold, loves those technical levels, and that's what you're going to get. It's going to keep in there. But if you actually looked at something like this consolidation, we all know that once it's done, its consolidation and makes a direction for what it wants to do and where it's going to go, it will go.
Look, we talked about this a lot in the move, right? That so here's your 50 moving
There we
average
go.
as well. You know, that's a nice call.
Yep.
Look, one thing I also want to say is, guys, when you're looking at charts, one of the things you can look at is, so here's the bottom of our range, right? And we had it broke out and came back, and really for mine, I'd be pretty nervous about watching this bar. For mine right now, even though the range is tighter, this bar really runs the market, but we can pull the range in a little bit. But we see the bottom, and what do we see? It gets here, and the buyers come in and smash it straight back up here, and it gets here, and the buyers smash it straight back up here. There is no, every time it hits the bottom of this range, there is a ton of buyers right now coming in and having a crack at this, and it does make me believe there's some more buyers around for it at these levels, and that you know, while people are resting from their longs and all that, and looking at everything else, I'd imagine there's still some buyers around this level. Boy, I've got to say, the conversation that's always the same, right? If you believe that, then the other option to this is that if this level gets broken, boy, then it's all on. It's a different looking game for months after that.
It is, and going back to last year, we normally see. Remember, October and November are normally bearish.
Yeah.
So that's something to consider. However, we haven't seen the seasonal bullishness in gold this season. Who knows whether the October and last year, October, November, which was meant to be bullish, and we kept waiting for, I know I did, kept waiting for a really good roll down on gold. It didn't happen. It was a really mild pullback on gold in that September, from the end of September, October, November sort of area. And then bang, I was in about the 16th of December and had that really good run, as you recall. But we just didn't see that at the end of last year. It consolidated, and I guess this comes down to in how do you interpret those seasonal charts? It's is it direction, or is it's not going to continue in that direction that you're in? So that's one of the things Steve Nissen, when it comes to candlesticks, he often says, be careful of dojis. They don't mean that it is a cessation or a reversal bar. He says it's a cessation or a suspension of the current market trend. So don't get too excited. It doesn't necessarily mean that it's a reversal bar in itself. You need more information. So seasonality, I think we need to be really careful with how we interpret that. We'd like to see it go strong in one direction or the other because that suits our fundamental buyers, I guess. But at the time, you still need to look at this chart and just go, okay, it's getting like a coil, and we can see, and we've seen previously back around July, look at what happened in July. It did the same thing. Remember, and we had that conversation, and I think it was Fad who asked us at the time, where do you go in? And we just plonked up and I said, pull up the 4-hour chart, Paul, and it was perfect. It was like buy on the pivot, and off it went, and bang, off it went again. We're seeing a very similar pattern. Yes, the bars are a lot bigger because I think there's just, as we're coming closer and closer to the election, and we've got a lot more happening on the NASDAQ and the S&P and the equities market, and there's just, you look at that market and that's just crazy numbers with unbelievable valuations happening there. Gold will still remain your safe haven. It just will.
It's hard to see that ever changing, isn't it? That is hard to see that ever changing.
Yeah, and just go back and look at your patterns and see how they are. The bars might be a little bit bigger, but you're still looking at the same pattern. You know. Look, I am long. I'm up 5 pips as of Saturday morning when the market closed out after having a roller coaster ride, because I was just looking at this and I'm waiting for that seasonality, and I had a few indicators on my 4-hourly chart, but it's nothing that's strong enough to keep me going at the moment.
Geez, Ainslie, just got one more question. It's just come in.
Yeah, do I think it's going to go down or up? Who knows at the moment? It's you can't tell from that. There's nothing to tell from that except it's consolidating, and it's going to go in one direction or the other. And I know that is a really good cop-out as far as trading goes, but it means that Monday morning, if I don't get a bit more information, I'll close out my position that I've got on, take it and wait.
Yeah, look, I do want to move on to Lloyd. I think he's in the show. I don't have him by his name, but I think he's logged in. I just want to see if I can answer a few questions. I'll get your thoughts on this as we go as well from Helen. And look, Helen, I think one of the things you want to do with these things is sometimes you just want to look for the most sensible answer you can possibly come up with. So I'm going to run through the 3 questions, and Ainslie, you can tell me if my answers are right or wrong. What does Ainslie do with her positions when gold does that or ranges like it is? She reduces them and trades a lot less. Is that right, Ainslie?
Yeah. Or if I'm in a position, I hold it as long as my long-term belief and my long-term story holds. If it doesn't, I cut my losses. You don't want to hold a bad gold position. It'll take you down really quickly.
Could it be COVID effect? People don't have jobs, and the answer to that, Helen, is of course it could be COVID. It could be the US election. It could be God knows what. It could be a million things. Yep. It could be so many different things. And to some degree, with fundamentals, what you want is to, if you don't know what it is, then perhaps put the chat aside. Is COVID affecting the price of gold? Personally, for me, I think that's highly unlikely. Gold's
unlikely. Yeah, I agree. Rubbish. It's what else is happening. There's so many things happening, from Brexit to the elections to COVID to, Oregon's on fire to you name it. There's a lot happening that's affecting the economy, and they're major things all in their own story. Don't just select the one thing to see how the whole market reacts to the way it's traded.
Look, last question. If US dollar goes up, as Julian says it might, will it mean gold heads down? Yep. If the US dollar goes up, look, there's no secret to this. It's all valued in US dollars. US dollar goes up, you can expect gold to sell, silver to sell, all the commodities to sell. You can expect indices to weaken. Everything that, particularly US indices will weaken, but yes, you can expect all of that. if the US dollar goes up. And what I would point out to you is right now, Julian's view on the US dollar is a short-term US dollar bull. I don't think he's a long-term US dollar bull yet, so I wouldn't get too concerned about that at this stage. I'd be concerned about it for short-term trading because he's always right. It amazes me how he does it.
Jules is a long-term gold bull at the moment.
Yeah, I mean, I think he said earlier on in the chat we were having that he's long gold himself right now, but cautiously, and I think that's Ainslie, you're cautiously long gold, right? I'm cautiously long gold.
Yeah. And you still got major institutions still expecting this to go to 2,500, 3,000 by the end of the year. Now I'm putting aside 3,000. 2,500 is a different story altogether, but it's still trading above some certain levels and holding them. As you can see from that little box that you've done there on a daily, it just doesn't want to know anything below it, does it? As soon as it comes down to that level, bang, straight back up again.
I'm starting to realise, Ainslie, that one of the reasons that we always run late on this show is because of me, and I've always thought it was because of everybody else, but actually it's partly because of me. I want to do something for the people in the room right now, and we've done this once before, but I just want to do it again, right? I'm going to get this little rectangle shape out, and I'm going to put it right there, straight before that move there. Yeah. If you want me to, I can put another one.
You can do it as many times as you like, Paul, and it does exactly the same thing with gold.
Yeah, and that's what it's always done, right? It ranges and then it goes, and this whole thing there, where gold is ranging. That's a bigger range, right? You're talking about here. We were talking about, potentially, if it's been a fair chunk of time inside that box there, and look, if you're a gold trader, what you have to do is you have to accept that it does this stuff and it bounces out. And again, that's what puts the buying in the bottom of the range as a possibility. And look, through these ranges, again, what it has tended to do is once it's formed the base, it tends to come off, not so much here, but comes off here quite aggressively, comes off here quite aggressively, comes off here quite aggressively, comes off here quite aggressively. And that tends to be a sign when it's starting to come off bottoms pretty aggressively. That, let's be fair, that this is not me and Ainslie and three of our friends buying some gold. This is some people with big money who are buying off these levels, and this is what it does. This is how it behaves. And I think this is one of the things about, and look, don't get me wrong. Let's just do this one to be clear, right? I'm not saying, and I don't want to, that it ranges and then it goes up, because sometimes it ranges, and it pops down, and
but if you look at that bottom level, it will go back and retest where that level it was broken. So it does that type of thing. It will go back and retest a level it's broken previously. So when it goes looking, and that's why I'm saying you've got to be careful with gold. When it flicks around, it can flick around really badly. I remember in this area, and we did it a couple of times, and we popped up pivot line, daily pivots. It was just bouncing. Yeah. Monthly pivots, it just bounced straight off those kind of levels. So it's what it does, and it likes the levels, and look at it. Bang, 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 bang.
It's all over the place, isn't it? Had a great time coming off. And I think we gave this trade out, didn't we, Angie, in the show?
We did that one.
You asked me on a Friday what I was going to do, and I said, well, it's going to come a weekly pivot, and it's going to take off. And
that's right.
You got that one.
And we even gave a level. We gave, I think we pulled up the exact point. If it goes to, what was it, 1805? Oh, I can't even remember now.
What was this level here? We said that if it's 1805, there you go. We said that if it reaches comes off 1805 and off you go, and bang to 1805 and away it went. And right now, look, one of the things that does interest me a little bit is that it is still a bit of time below the pivots. I want to say that quite a bit of time recently below the pivots, but again, I think that for all this discussion, it's a bit of a wait and see and have an opinion, right?
Absolutely. All we know is with gold, the tighter it consolidates. So look at your highs and lows, and it's coming in closer and closer and closer and tighter. We all know that it's going to go in one direction or the other with gold. And that's the way that's the way it trades.
Telling us that he thinks gold's going to hit to 1750 on the triangle, and look, I'd imagine that he's forming a triangle, and look, it's one of the things that's always interesting, and I do need to move on, but
I don't know. How's that?
The triangle here, you can measure it.
Yeah.
And say, okay, well, the top to the bottom of the triangle is
keep going. And a bit further.
Oh, I don't think the triangle goes to there, does it?
I'd go to
This is my base.
there. That's your
And,
base, but it went and retested that level, which was a previous pivot level.
Which is $165. And what we're saying is that if it breaks the triangle here, it could easily go down
Good.
same kind of level. So Tindrapa's got a target on of about 17. What do you got, Tindrapa? 1750. Look, I don't think that there's too many people even who are long gold. I'll tell you that's out of the question with gold. You know, is it going to break the triangle and go down there? Look, for me, you know, personally, I'd say at this stage I'd be surprised. To be honest, then again, I do need to move on in this, but I just feel as if there's too many people from this rally who have got a emotional-based attachment to the long. And we've heard the talk of 3,000, we've heard the talk of 10,000, and there are too many people trying to buy dips on this to see it get there unless the US dollar strengthens substantially. That's the play from Julian that could change the whole thing, and that could very well be different. As we've said a few times on this, you know, lots of opinions, but watch this closely is the key. I think one of the things that will give us a bit of an indication on what's going to happen to gold, the dollar index. And Lloyd's up next. Lloyd, are you with us?
Hi, Paul. Yep, I'm around.
Hey, Lloyd. Nice to have you on board. I'm doing a little introduction to each of the traders when I remember today. Full-time trader and investor, Lloyd. Creative, a bit of a rule breaker as a trader. Do this for a living nowadays, right?
Bit of a rule breaker. Yep. Full-time trader, living off purely from trading nowadays.
Not reckless, right, mate? Just you're a bit more aggressive than some, right?
Yeah. I mean, I probably it's just in my nature, just to keep on pushing the border, just to keep on discovering things, and just to make life a bit interesting for myself.
Yeah, mate. It's a great adventure, isn't it? Trading for a living. It does continue to provide you the need to get better and some challenges, but boy, it's rewarding when it works out, isn't it?
Yeah, I mean the rewards is. I mean, I'll still stick by what I've learned prior. Is that trading is really it's really where the easy money is, but unfortunately we are always up against ourselves, and that's the hardest part because guiding ourselves to admit that we are wrong is always one of the hardest things to do.
Cheers for the feedback on Facebook, John. Much appreciated to see that in there. It's nice to see some positive stuff in there. Lloyd, let's talk dollar index and currency strength. What do you got for us?
Yep, so let me jump over to the screen. I think I got some really interesting analysis on the currency indices for this week. So let me share it with you guys. Right. So the first up on the list, wait a minute. Okay. So I did a bit of shuffling. The Aussie index, Australian currency index, I think I'm still bullish about it. Yeah, we still got very nice cyclicity. Price, in fact, has very, very beautifully retested the horizontal, short-term horizontal level, and now it's just going above. So the momentum does reflect that. So I think this is rather straightforward, got nothing much for that. The Canadian index, same thing, very nice cyclicity. Early start of the week was a bit wobbly, and now the momentum for buying is back. So I think it should comfortably hit to 77.5. I don't see any major support or resistance issue for that. Now coming down, the Kiwi is getting a bit interesting for me already. Yeah. So as of last week, I'm still bullish about it. But as you can see, this particular level over here, which is about a 67.5, proves to be a really strong level that price seems to be unable to break. Yeah, so for the chart patterns, they would read this as a triple top formation, I guess. Yeah. So for anybody who's trading Kiwi this week, I would say that although the trend is with them, I mean, we still see really nice cyclicity from here onwards. The thing is that this horizontal level should not be ignored. Yeah, so I would load up the position, but at probably a reduced risk from henceforth. Yeah, so Kiwi's got to get a bit cautious for me. Now, Swiss, been saying for the past 2 weeks, it's going to range. So it's still ranging at 110. Now, from Swiss onwards, there is a very interesting phenomenon. You see, so under usual ranging, trending situations, I would see the peaks and valley from the histogram. Now, for a ranging currency, all I'm reading from the histogram is just seller, seller, seller. There's barely any buyers in here. Yeah. So from the past record, when it's clearly a ranging situation and I don't see any buying momentum, there's only one question at the back of my head is where are the buyers? It's either they have already loaded up their positions and the buyers from the henceforth is actually to the long side. It's actually not to the seller side because the seller has already shown their hands already. Yeah, so Swiss, I would say I park in the middle. It's still ranging, but as of officially this week, I would say my bias is towards the long side for the spring to actually, I would say the spring is actually loaded already. Yen, same thing. You can see that price is still ranging, yeah, but the histogram is behaving as per normal. So I don't think there's anything significant to that. Now, coming to the euro side, ranging, histogram is only the sellers have already shown their hands. Yeah, so this is the interesting thing that I'm reading from the charts. Yeah, so it's that a couple of the currencies has similar behavior. Yeah, so in a way, I would say that as a trader, the opportunity is actually right at our doorstep at this moment for a breakout trade. Really strong indication from there. For the dollar index, you can see that similar behavior by the histogram. Yeah, so it seems that the buyers has already shown their hands. Now we got to guess is where the sellers are. Yeah. So at this stage,
Lloyd, Helen's asking, and this is just really great. I really appreciate these questions, and thanks for answering them, Helen. More people need to ask them and get this stuff. I really appreciate the fact that it gets the stuff clear. What does it mean sellers have shown their hand? I mean, it sounds a bit weird. Why are they showing their hands, Lloyd?
So you can, okay, let me give you a example from Yen. So from this part, no, sorry, this part, that'll be a more accurate. So you can see that over here, the buyers have shown their hand. So we can see clear cyclicity just from this part onwards. Higher high, higher low, higher high, higher low. What comes next is we barely see the sellers over here. See, the peaks and valleys are not reflected in the histogram. And what comes next is just pure selling for the next 2 weeks or so.
So, sorry, Lloyd, what you're saying is that there's divergence on the histogram here. That price is putting in higher highs. Sorry, the histogram is putting in, your price is putting in higher highs, but the histogram is putting in lower highs. And it tells us there's divergence and the move is probably coming to an end. In this case, we're talking about the histogram's putting in, price is putting in the same lows, but the histogram's putting in higher lows, and it's divergent, and you believe that means that the buyers are coming back, right?
Yes. Not necessarily the divergence that most people have learned is that higher high, and then the oscillators are showing the opposite direction. Not that particular divergence, but conceptually, Paul, you are right, is that we don't see any direction in the chart for this particular period. We don't see any real direction. But on the histogram, there is a direction going on. You can see that sellers are all here. So this is the divergence that I'm really talking about, or rather you are talking about. Yeah. So really in a ranging situation, we should see in the histogram there are equal buyers and sellers. That means equal peaks and valleys, but we don't see it here. So that's the worrying part or interesting part, depending on one's perception.
Lloyd, let me jump in. Helen just asked if it's hidden divergence. You're not talking about the fabled hidden divergence. You're just talking about when you look at it, it's clearly different. That lows are the same lows, and this cryptogram's not putting in, the histogram's not putting in the same lows. And what's more, it's putting in a slightly higher high as well in the midst of all of this stuff. And the histogram and price don't actually line up, and that creates an opportunity to have a look and go, okay, well, that's the momentum here hidden is a little different than what we're seeing on the chart, and we may see the sellers fall over here and the buyers push in.
Yeah. So I think conceptually there's a bit, at this moment, I don't know how to really put it exactly into words, but I think as always, trade what you see. But what I'm suggesting is that, yes, there's a divergence here, and the divergence does suggest that the buyers might be coming back in already, because all we can see are sellers indicated by the histogram. On the chart itself, this is actually a ranging chart. It's just that it does not show on the same histogram. yeah, I don't know. Does that make sense?
Sorry, Mr. Miller, just looking at some more questions. So sorry I was away. Look, I think we've done enough on this. So then we'll talk about it every week, and it'll get a bit clearer as we go along, right?
Yeah, it should get clearer along the week. I hope so. Yeah, because I think 3 of the charts have been showing similar tendencies really. So euro is showing the same thing, dollar is showing the same thing. So you can see that dollars, we have no sellers over here. Yeah, there's no selling momentum over here, but we have a horizontal level. Yeah, so I think the sellers might be coming back in pretty soon. Yeah, I mean, if I'm wrong, then all it means that there's a breakout trade coming in. Yeah, short term wise, that means Julian will be right. Yeah. So, and the last will be actually pound. Now, pound took me by surprise. I think it already broke its cyclicity, broke 130. Now coming back to 128, testing the horizontal level. So as of this week, I'm officially a pound bear. Yeah, pounding the bear. I don't know. So yeah, so that's my ranking for this week.
Cheers, mate. So you just broke up a little bit. You're now a pound bear, right?
Yes.
And you're telling you're right that the histogram Lord was talking about, suggesting that buyers are going to come in there. Well, buyers have got a bit more strength than what price is showing us. Is this? And look, it's one of those things, Lloyd. Right? It's not a science, right? This is about histogram gives you a bit of a bias, bit of an indication. Then you look for price action to confirm it, right?
Yeah, so the histogram is trying to tell a story, but as always, like what you mentioned, Paul, wait for the price to confirm it.
Cheers, Lloyd. Thank you very much. We will talk to you next week. Much appreciated. Next in for us today, we have got Geoff Pine. I'm going to grab the screen while we introduce Geoff. And Geoff is the granddad for Actions to Wealth. He's been around now for about 470 years, I think it is. He trades a particular strategy which goes particularly well in ranges, but also his strength is market analysis. And we're going to hand over to Geoff now to have a run through some currency charts with him.
Cheers, mate. Lloyd, you've got to be very, very brave to pound a bear, mate. I got it. I'm not sure everyone else did, but I got it. Well done. I'm going to start with, and I'm going to, yes, mate. No question? Okay. I'm going to start with Swiss again. And I've got a question straight away from for all of you fundamentalists in the room. Where does the Swiss National Bank generally intervene when their currency gets a little bit too overvalued? And I'll take that on board from anybody who wants to answer it. But what I see on the charts right now is a double top on a daily chart. What I see on the weekly chart is probably more than a double top. And what I see on the monthly chart is a level through here that is rarely breached. And just before we had the decoupling of the Swissy and the yen, and the euro rather, which is this bar here, we hadn't been above that for the longest time. Of course, we didn't spend too much time above there either, I've got to say, once we did get back in this incredible move that we saw on the 1st of January 2015. So my contention is that we're probably at a point that this pair needs to have a little bit of a bounce, and the bounce, to my mind, would be to the downside. So I'd like to have a little bit of confirmation around that with what the Swiss National Bank actually do when their currency gets overvalued. And are we at that point? That's probably the question I've got for the fundamentalist people. It's not going to, yeah.
My thought on that, and again, you're talking back when I was young. This is a long time ago, but my recollection is that the Swiss are pegged to the euro, and that that is the one that, because it's their local competition, if you like. The Swiss are in export markets, and they're competing with the euro now. Around the time that the Swiss intervened in the market, the Japanese intervened in the market. I think actually before them, just not to quite the same degree. And I'm just trying to get back in my charts to get a picture of this. But Yeah, so Euro Swiss 120 they were protecting, and I think you can make a case that it's possible that there's been some protection of it since. But you know, I think you know, trauma from events sits pretty hard, and it's Euro Swiss, Helen. Yeah, it was Euro Swiss. Trauma from events sits pretty high with people and lasts a long time. And the last time the Swiss intervened in the currency market, the consequences were dreadful for them. The wife of their Swiss bank governor was jailed for insider trading on the move. You know, and you know, the first of the first, they picked it crazy. They
Yeah.
they uncoupled at a time when there was no market depth. And you know, I've often said this: we're very, very lucky on that one that we just didn't get hurt. Everyone got hurt, and we were lucky.
Yeah, anybody who didn't was lucky, probably.
Yeah, I mean, because it was pegged at 120, everybody had longs at 120 at 120.20 with a stop loss straight below. So as soon as they took the peg away, it just ran all the stop losses. And you know, the bigger places obviously had stop losses a long way down because that thing got down
and took them to a place where they never thought they'd be. Yeah.
Yeah, look, and they've never managed to protect 120 since, and I don't know if I could see them. Well, they won't be coming out. I mean, it's very common, well, not very common. It's reasonably common for central banks to manipulate currency markets in the background, but I can't see the Swiss coming out and saying that they're doing the same thing. And again, the yen move often gets forgotten because you know, it wasn't quite so chaotic, but they did also do the same thing.
Okay, interesting. Apart from all of that, I guess what you're saying is this is not likely to be an intervention point.
Honest, I don't think it needs to be, right? You've got a brilliant level there, right?
Mm-hmm.
So I think it stands up without too much intervention from the Swiss National Bank. Now, the Swiss bank may operate like the Singapore bank, where they do interfere a little bit. And if they do, there may be some interference, but it won't be that kind of interference. We won't be seeing, I don't think we'll be seeing that kind of public statement where we're pegging, it's going to blah, 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 unlimited resources to defend it, which they didn't in the end have. I think they might be in the background manipulating price around here, but they won't be outwardly saying that, I don't think. And again, that's more of a Julian topic, but I'd be surprised if they came out with a statement like that, having been absolutely humbled and embarrassed last time and not being able to hold it. I'd be surprised if it was such an overt move from them, you know.
Okay, cool. I really didn't need any confirmation that I've got a technical pattern here, but I thought it'd be nice to just enlighten myself on that particular part of the world that I know very little about in terms of what they're likely to do when a currency gets to a certain level. So here's the upshot of it all, and that level I've just shown you, to my mind, is pertinent, and therefore I expect to bounce off it. Have we started? That is the question, and the double top here suggests to me that perhaps we have, and this bar here, which is very, very interesting one for me, because it is a lower high, potentially, it's not there yet, but potentially it's a lower high that has refused to go above, or close above certainly, the monthly and weekly pivot. Actually, I normally do this where the weekly pivot will be tomorrow, but I see this candle here as eminently tradable, frankly. I want to see what happens in the morning, of course. If there's a big gap in the market, I'll probably change my mind, but if there's no gap in the market tomorrow, and I know it's a big bar, but I can totally see myself entering the market if price gets there, and a stop loss above there makes a bit of sense to me with a bit of profit around about that level. So that's kind of what I'll be thinking tomorrow on Swissy yen. And if there's no intervention, then happy days. We're on target for what we would like to see. Now, my analysis last week was kind of interesting. I was a euro bear and I was holding pounds long positions. Oh my God. Could I have been any more wrong? Probably not. But guess what? I'm still the same. Nothing's changed in my bias point of view. This is Euro CAD. And EuroCAD, to my mind, is similar to a lot of the Euro pairs where we've had a big run up, and we've also had a little bit of a kick off the top, if you like. The question mark now is, with this descending channel that I've got here, is that going to be faithful to the bulls? And the bulls have already broken out of the top of that, as you can see on the daily chart. But my mind still goes back to the bigger picture. And if you're of a mind that the longer is the stronger, it's very, very similar to the Swissy yen chart that I've just shown you, where we've got long-term rejections of a level, and we are at that level again. So my bias, of course, tells me that we're going to bounce off here, even if we retrace, you know, like 20%, 30%, 40%, or whatever number you choose. We're going to get a little bit of a trading opportunity down here. So every time we've got to this level, and I haven't measured it, but why not do that? Makes sense to me. We have a deep retracement, and there's another one, and I'm expecting another one. Whether it is faithful, if you like, to the trend or otherwise, still gives us plenty of room to retrace. So I'm of the opinion that this is the potential short. If I go a little bit wider, you can see that those peaks there have driven this down on many occasions. So I maintain that that particular stance on EuroCAD, and I don't see any reason to change that at all. The wider I go, the more I just see this level, and the more I see that trend line, and the more I see we're coming back to it. So as far as trading it's concerned, have a look at the daily chart there. That massive double top that we've seen on the daily charts, I expected to go a lot quicker, I've got to say. I expected that we go bang down here very, very quickly, down to the 143 mark. Haven't done that, and that kind of gives me a little bit of doubt. It does put a little bit of doubt in my mind, but and I think I was calling, well, I don't think I was calling this a Batman mask potential. And I think that's still there, but Batman's ears are just protruded out the side of his mask, if you like. So I'm still a bear, and until this double top's taken out, I'll probably remain that way. If it's still going, I mean, it doesn't necessarily need to go there now, of course. But whatever those double tops are in place, that's a massive signal to me. And I think that signal is still to the short side. So EuroCAD short for me. And all the euros are pretty much the same. I'm still of the opinion that the euro is coming off. And if you look at it against the dollar, it has bounced off a major trend line. But these pairs are also giving me a very interesting signal that I like to trade often. And it's my version of Three Little Indians. And we talk about ranges often. I don't have the range on this chart, but it's probably in here somewhere. It could go a little bit higher if you wish. But when I see a break to the high side, that's false, followed by a break to the high side, that's false, followed by a break to the high side, that's false. To me, that's going to break short. So that's what I'm looking for at the moment. That candle there interests me somewhat on the daily chart. Again, I'll look for gaps in the morning. And if I see them, then I'll probably have a little bit of a rethink. But that to me is a chart that's screaming at me, this is going short. Now, I'm not saying it's going short forever, but I am saying that it will break this rectangle short. And you can see reject, 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 reject. What makes me think that's going long? Not a lot, I've got to say, right now. So the level I see this going to is probably around here somewhere. That looks sensible to me, around about the 106 mark. So I'll be looking for that to trade this week as well. As I said, I was bearish the euro last week and didn't even get a look in, frankly. It just kept going to the high side. That happens. The good part is we didn't waste too much money on it. The third one I want to look at, and I've been avoiding the dollar, trading against or even with the dollar for the longest time. And I do see that there's a possibility that the dollar can rally to 95 on the dollar index, if you like. That's kind of where I see it. But I've been saying that for the last, I don't know how long, maybe 2 months, something like that. But the most incredible thing about the dollar, to my mind, is that it doesn't play the same game with the yen that it plays with everything else. And that intrigues me. It really does. But trying to work it out and trying to trade it is another story altogether. And I'd love to, I must, if Bali was on this year, that would have been my prime target, is to sit down with the likes of Julian or Justin and have a yarn about why this yen versus the dollar is so intrinsically different to any other currency versus the dollar. But what I see here on dollar yen is quite interesting. We've got this big bar here, which is the dominant bar on the entire chart, frankly, that's got, I think it was 9 or 10 days that are inside that bar to the left, and definitely 10 bars to the outside of it, or to the future side of it, if you like, that are also engulfed by that very bar. Now, that's a range in its own right, of course. And if you really want to count these, which aren't really inside, but you can go back to about 19 or 20 bars inside that bar right there. So this is, in my mind, a range that will burst. It won't just leak. This will burst out of here. And I think it's going to be to the downside, frankly. I don't know when that's going to be honest. And it is a mess. The entire chart is a mess and very, very difficult to predict. But that big bear bar to me, and there's a big one here as well, and there's a big one here as well, and there's a big one here as well. It's telling me that this is potentially going to the short side. If you look at the big picture, then it's been doing that for quite some time. And if you use your imagination just a little bit, there's a head and shoulders sitting there as well, which was broken and retested here. That's also a very bearish sign. We've taken a hell of a long time, I've got to say, to get down here. And every single time that we do, we reject that level. But I think we're going to have another crack at it. And I'm on the bear side at this point in time. I've even got a position in the market at the moment. It's trading that big bar with a retest of the pivots that we saw a week and a half ago, or 2 weeks ago now. So I'm short underneath that bar if we get to that level. If we don't, then it doesn't really matter. If it breaks to the high side, who cares? But I think if we go to this level again, then we're headed down in this direction. So it's dollar yen. It's more of a long-term play, but I've still got on the daily chart that trade in the, and I won't cancel that, frankly, until it's broken to the high side or the downside, either way. But this candle's got to break at some stage, and when it does, I think it'll break with a fair bit of venom. And at the moment, I think that's to the downside. It could take a month, but that's the way I see it. So that's it, mates. They're the four. Swissy yen, short. They're all short. Euro CAD, Euro Swiss, and dollar yen, all short. And hopefully I got 0 from 4 last week in terms of direction. Let's hope I can improve on that.
Mate, the good point, of course, is when you get 0 from 4 for direction on your strategy, you don't take any trades, you don't lose any money, or very few. Yep. So it's not the end of the world, right?
That's the plan, yeah.
So summary, guys, we are talking about, I think we're talking about some short-term dollar strength from a number of our people. I think perhaps some dollar weakness long-term, but short-term dollar strength. Could see stock markets continuing to sell a little bit. Could see gold holding around this level. We are, there's a few of us looking for buyers in gold, but we need price action to confirm all the stuff at the moment. It is we've got the Fed coming out early Thursday morning, I think it is New Zealand time. And as a time this week, we just need to watch, and we need to wait for confirmations. Where's the cable? Where's cable going to go? Boy, this Brexit stuff's knocking that all over the place. It could go a long way in either direction in the next few days. And it's just a time for caution. It's a time, there's a time in trading to make your money, and there's a time in trading to not lose your money. And this is a week about not losing your money. It's about, if you get the right opportunity, you take the right opportunity, but let it complete. Be positive, be sure before you take your money. If you're looking to subscribe to the YouTube channel, there's a small ATW box in the bottom right-hand corner. click on that and subscribe now. Will open up and you can subscribe to the YouTube channel. If you do that, that will keep you updated on the shows for the week. Coming up this week at Monday and Wednesday at 7 o'clock, we've got Shukri on cryptocurrency. 7:45 Monday, Tuesday, Wednesday, Thursday, we've got Chloe and Orlando on tea and hot sauce. 8:30 Monday, Tuesday, Wednesday, Thursday, we've got Geoff and Ash on Learn to Trade live US session preview. Lots of free content. We've also got Geoff and Ash at 5 to 3 in the afternoon, Singapore, Monday, Tuesday, Wednesday, Thursday, as well on Learn to Trade UK session live. So a huge amount of free stuff coming to you this week. For the mentorship students, I did forget to talk to Ainslie about that. We've got an hour, we've got a couple of hours with Ainslie and Julian on Sunday next week. The week after, we've got the free stuff with Shukri. The flow is coming back with Mikey on Sunday for the new OTP clients. It's a busy old time. Going to have a quiet wine tonight, Geoff?
No, probably not, mate.
Cheers, everyone. It's a simple thing in trading. It never changes. Make good decisions this week. Take your time, be careful, and trade well. And we will talk to you again. I'll be back next Sunday with the team for this show. And as I said, there's plenty of content coming to you all week live from the team. Subscribe to the YouTube channel so that when we bring you live content, it comes out. We've got a couple of extra freebies coming in this week as well. We will just be running a couple of free shows, but they will be just live. You need to be subscribed to the channel to see them. Thank you, Geoff. Thank you to the rest of the people who helped us out today, particularly Ainslie in the middle of that move. That must be a busy old time. Lloyd, Geoff, Shukri, Alexis, Julian, your contribution is all much appreciated, guys. I hope I didn't miss anyone out. Did I miss anyone out, Geoff?
I don't think so, mate. No, I'm laughing at the comments. Sorry.
That's okay. We will. We will see you guys next week. Take care. See you.
Hooroo.